What's up, everybody? Thank you for tuning in today to another episode of Airbnb Rental Empire. Again, I apologize about the shortage of videos. Things have been crazy. I've just generally been out there, hustling and making things happen. As you guys probably saw in some of my other videos there, I had the long rehab, the property that I purchased, remodeling that took about 7 months. And that took a lot of my time, and I had to focus on that. During that time, though, it wasn't just that property that I was focused on. I also added 4 other rental properties to the portfolio that I'm doing rental arbitrage with. That is what the primary, my primary business is focused around getting rental properties from other owners and renting it from them and then doing Airbnb rental arbitrage. My focus is not purchasing properties and dreaming about appreciation, buying in these vacation rental markets that are very cyclical, this sort of thing. That is not my game at all. My game is to get homeowners that own the property, get them to rent it to me, and they also cover then all the major expenses. That's a big part of it. I mean, you're saving, you're not getting obviously a price appreciation if the property goes up in value, but you're getting the owner to cover these major expenses that are real expenses that people aren't even factoring in. I see all these, so-called Airbnb gurus online, and they run these numbers and run the calculations on if this property pencils out. They don't put any calculations in there for, capital expenditures or very little. So those are real things that you have, that you have to factor in when you're running an operation, when you're running a property as a short-term rental. The way I structure it, though, with owners is, they have to pay those major expenses. The air conditioner goes out, they have to pay that. I take care of little stuff. But they take care of all the major stuff. Basically that's not exactly why I'm here today. I want to talk to you guys today more about why this time more than ever, it's riskier than ever. It's riskier than ever if you want to buy a property and get into the short-term rental business. Again, so many people online are pushing this, massive portfolio of these vacation rental properties, whether it's in, Colorado somewhere, New Hampshire, Wyoming, Joshua Tree, Big Bear, wherever that may be, and they're accumulating this massive portfolio of properties. And the main reason, I think, and I hear because they're saying it directly, the main reason that they're purchasing all these properties is because they're hoping for future appreciation. But let me tell you something. The truth is the likelihood of future appreciation at this point in the market cycle is very slim, Right now you have, just now the other day it came to mortgage applications, are at a 22-year low. The real estate market has absolutely frozen in the last 60 to 90 days. There's increased supply, rates have gone higher, there's massive price cuts. These are all things that are part of a market that is going to fall. These aren't parts of this isn't the elements of a market that is going to see price appreciation, which is what these people are looking for. So, with that as the backdrop of where we are today, this is why, I'm not getting out of the business. I'm not getting out of the short-term rental business, but I'm also not buying any other properties right now. I purchased the one property that I went through, for 7 months doing the remodel and rehabbing it and turning it into a short-term rental. And I'm extremely happy with that. Even if the market softens, I'm still happy with that. I purchased that property with other things in mind. It's not a speculative investment. It's not far from my personal residence where I live right now. I also thought about the fact if I needed to, I could live in that property. It's something that I would find suitable for myself and my family. So, it was bought with that in mind. Also, obviously in mind that I'm turning it into a short-term rental, but it wasn't a one-dimensional purchase for me. And like I said, during that time, I acquired 4 other properties that I'm doing short-term rentals on that I'm doing Airbnb rental arbitrage. I rented them from the owners, and they're allowing me to do short-term rental with it. So that was part of the reason why that project was delayed, which is irrelevant. But the point is, my main focus is still to expand my portfolio of properties through rentals. It's not through owning all these properties. And the reason is because I'm getting insane cash flow. There's no doubt about it. I'm getting ridiculous cash flow from these properties when I'm able to rent it from the owner and then re-rent them. It's, again, just like in anything, whether you're buying or you're renting, it's all about the deal that you're getting. There's a lot of deals out there that are terrible that I don't take on. I get a lot of owners that reply reply to my cold emails, which is exactly how I contact them. I've gone over that in another video, and I'm going to also be, launching those scripts for you guys online here shortly, so you'll be able to get those online and use them yourselves. But I'm getting a lot of owners that are replying to my messages, the properties that I don't want. So I don't take everything on. But again, it's just a numbers game. I'm blast emailing basically every property that falls within a general criteria of what I'm looking for, not specifically. I'm not going and analyzing the property to say, okay, yes, I would definitely like it. No, it's in an area that I would like, and it's at least the size that I would like and the bedroom count that I would like. That's basically the general criteria of what I'm looking for when I blast mail these people, and then have them come back in and follow up with me on my campaign. So that has been the primary focus of me going back for the last 10 years that I've been doing this, at least. That's always been the focus, has been acquiring these properties through rental, and nothing has changed. And in fact, now I feel like this is more than ever. This is an important time to continue doing that. The market is going to soften. I don't want to buy any other properties unless I see something for other reasons, where I have other reasons to also purchase, other than strictly as a short-term rental. But I'm not focused on that right now. Right now, I don't have any plans of buying anything else, but I absolutely have plans to expand through rental arbitrage. Again, a lot of these people are buying these properties. The main reason that they're talking about buying these properties is because of price appreciation. You're unlikely to get further price appreciation at this point, and in fact, you're probably going to get depreciation of these asset prices. These asset prices are going to deflate. I mean, it's definitely going to happen. I can't say definitely. Obviously, nothing is definite, but in all likelihood, it looks that way. You have a rising rate environment. You have an increase in supply, and especially in these non-urban areas where you're not restricted by land use. You have abundant amounts of land where people can continue building. People can continue building out into, however far as they want to, parts of Texas, etc. You have people building ranches and, expanding into the outskirts of Austin and going God knows how far out there. There's not going to be a market for that forever. You have no restrictions on supply. If you're in an infill market, such as I am in Southern California in the Los Angeles market, there's a restricted supply there. You can't just build any property that you want. I don't expect that market to fall like some of these other areas are going to fall. I think Las Vegas is going to fall. I think Joshua Tree is going to fall. I think Boise, Idaho is going to fall. There's already a lot of signs, a lot of cracks in that are already starting to show. And I think that's just going to further, that situation is going to get worse than what it is right now. So I come back to renting these properties and doing the arbitrage, doing the rental arbitrage. You even have more owners are aware of Airbnb and what that entails. I'm getting a higher response rate than I was before. I'm getting a lot of owners that are contacting me saying, yeah, would you like to rent my property? I'm currently out of the country right now, but I'm already starting my marketing campaign. I put it on pause a little bit because my total time out is going to be about 6 weeks or so. So there was no point in me marketing to owners in the beginning of my trip. But as I wind it down, I'm continuing to market, and I'm talking to owners every day. I've picked up about 4 new solid leads in the last 5 days, from my cold email campaign. And it's looking promising, because then right when I get back to Southern California, then I'll be able to jump back right back into it and get some new properties. But the reason that I love the rentals, again, doing the rental arbitrage, is renting gives you a lot of outs. That is an important facet of why I do that. I have a lot of different options. If the shit were to hit the fan, proverbially, then what I can do is I can do a lot of different things. I can do corporate rentals. I can do long-term rentals. I can also do medium-term rentals. I can rent at 30 days at a time. There's always people that have been dislocated because of an insurance issue. Not an insurance issue, but they're getting it paid by insurance because maybe they had a pipe flood in their house or something like that. It's oftentimes I've noticed plumbing issues. Pipe burst, the kitchen floods, they have to redo all the floors, etc. So that sort of situation is also a market that you can rent to if you're not renting to vacationers. And that is especially true if you're in a major metropolis. Maybe it's not as true if you're out in the suburbs somewhere and that sort of thing, but if you're in any sort of a major city or even probably a mid-tier city, you're definitely going to have those kind of people that are looking to rent. So I like having those outs, And in addition, the other major out is you're only in a lease. You're not stuck in a 30-year mortgage where you have to go through and try to, if you want to get rid of the property, you have to sell the property now into a depressed real estate market. That's not going to give you a lot of options. Let's say you put 10 or 20% down. If, God forbid, you only put 10% down and that market decreases more than what you owe on it, you're going to be in a short sale situation. You're going to be having to get out of that by either letting it go back to the bank, or you're going to have to cover the remaining balance in terms of what the net is to the bank and your mortgage amount, or you're going to do a short sale. And I know that market very well because I did a lot of short sales in that kind of 2007 to 2010 range. I was actually the top realtor in multiple cities in California because I was doing so many of them. Even though I didn't live in those cities, I was acquiring those and negotiating those short sales like there was no tomorrow. But that market is going to come back. I know it is. And I see a lot of the similarities that led up to the crisis that happened in 2009. I see a lot of those coming back again. You already have, for the last few years, you've had a lot more relaxed lending standards. Definitely not to the same degree that it was before, but you still have a lot of markets you can put 5% down, 10% down. A lot of these markets are going to crater. They're going to go down by way more than 10%. So the second you have prices falling more than what people are putting as a down payment, you're going to have a situation where, again, it's going to cause a crisis. People are going to be unable to get out of that property. However, if I'm doing a short-term rental and let's say I'm leasing it from another owner and the market turns on me, I'm going to be able to get out of that. I'm either going to be on a month-to-month lease because I've already gone through the year lease that I signed, or I'm just going to be able to break the lease by whatever the terms are on there, which are going to be minimal in comparison to if I owned the property. Or I can, not even, the break in the lease is the worst case scenario, but I'm not even anticipating needing to do that. Again, I can let's say I sign a 1-year lease and I do short-term rentals for, let's say, 6 months. And then let's say the market goes bust, which I don't anticipate it will. But again, there's always the what if scenario. What if regulations change and I can't rent, etc. What I'm going to do in that instance, I'm going to rent to people a furnished rental for the remaining 6 months. And then I'm going to get to the point where I can get out of the lease. And once I'm at the lease expiration, then what I can do is I can just tell the owner that I want to move out of the property. And it doesn't cost me anything. You know what I mean? There's not a capital loss in doing that. It gives me full flexibility to get out of the market if I need to get out of the market. I don't anticipate it, but I like having that flexibility. That is the key. Again, I've been doing this since about 2012, so I don't anticipate that changing. But again, the economy is changing. We're probably coming into a recession that is going to change the dynamics a little bit. And I may end up giving up a couple of my properties that are the underperformers versus the other properties that I have. I don't anticipate doing that, but it is a possibility. I'm always trying to lean out the operation, and of course trying to cut my losers, or what I'm considering losers. They're all still making money, but I have other ones that are making less money than other ones. So of course I have an order in terms of the ones that I prefer and the ones that are the highest performers. So if push comes to shove and the market turns and everything shifts a little bit, I'm going to cut those losers, and I'm going to focus on just the ones that are really working. So again, I have that flexibility because I'm renting these properties. The majority of them, I'm not owning them, and this is what I'm going to continue to focus on. The risk-adjusted returns is something that we should look at. That is always something that you should look at. It's like you don't want to risk your entire life savings to maybe have some long shot of winning the lottery or something like that. That is what we call risk-adjusted returns. You're risking a lot. You're risking a lot to not, for an unlikely scenario. And that is where we are at in the market with people buying real estate right now just for short-term rental purposes. Different if you're buying it for your house, and obviously every scenario is a little bit different. Maybe your scenario is a little bit different, but in general, if you're trying to accumulate, or you're thinking about accumulating a large portfolio of properties to do short-term rentals with, and you want to buy all those, I think you should question that decision and wonder if that's really the right thing and the smart thing to do at this point in time. If you want to be a good steward of capital, I don't think there's any way you can make that claim and do that with a straight face. I appreciate you guys tuning in. That's it for this video. I just wanted to touch base with you guys a little bit. it. And my next video is going to be, I'm going to dive into all the numbers on that property that I discussed, the one that I remodeled, I did buy. I'm going to dive into all the numbers in terms of what that thing cost me, so you guys can see and make a decision for yourself if you want to buy or if you want to do the rentals that I've been advocating. Again, that property was a little bit unique for me because I have a lot of different aspects of it that I like in terms of I could also live in it if I ever decided to. But I'm going to dive into those numbers with you guys. I'm going to be very transparent. I'm going to show you guys the first month's operations, the income that I've gotten from that. I'm coming up in a couple days. Have been on the market for a month. It's been very successful, and I'm going to dive into all those numbers, and that's going to be the next video. Thanks again for tuning in. If you guys haven't already subscribed, please do, and see you guys soon.